Hello. In this video, we're going to discuss the concept of gap fills. It's not something that always happens, but it does happen fairly frequently. I'm not sure, what percent of gaps are filled. I've never really researched that. But let's just take a look at the concept of a gap fill. And a gap fill starts with a gap up, or it can be a gap down. It doesn't. It can be either way. This is an example of Apple. This chart that I'm showing you before you. This was earnings, so the stock closed, had a big pop after earnings, and then the next morning opened with this gap. So this is what's called a gap, and because the stock was doing so well, it just continued to go some back and fills, and put in a new high, and then started to come back. And then this right here is where this gap was filled. So essentially, the open the close to this open, that level was filled. And the reason I'm drawing a line over here is not only to show you the gap fill. So let's actually take a look. If we were in this candle right here, um, if you are a trader and you see that the stock came in and kind of filled that gap, you're actually hoping that that's going to hold. So typically what you would want to see if this stock was doing pretty well is that value would hold, and then you would start to move higher. So that would be a nice healthy pullback. What happened is there was some consolidation or fighting, if you will, for 1, 2, 3, 4, 5 bars. So first this kind of became support. This next candle, big strong move lower, but then all of a sudden that if you want to call it the bulls and the bears, I guess the bears won here. I don't usually like to talk that way, but in this case now the bulls came back, the longs came back, and we were able to hold that level. Over here you're actually going to find some confidence as a trader because the stock held at that gap and then started to move higher, but then all of a sudden started to dip lower, and now lower and lower. So first of all, that's just an example of this is what a gap fill looks like, or that's a gap up, excuse me. And again, it also can be a gap down. And then this is what a gap fill looks like. Another way you can use gaps is to get a sense of possible price targets if a move is higher or lower. So if we take a look at the monthly chart on Apple, which is actually in a very big downtrend right now, here's a gap that goes all the way back to January of 17. So this is a 2 years in the making. Whether Apple's going to come down to here or not, come down to this level or not, is unclear. It doesn't have to, but is a good chance that it is going to try and fill that gap. And another way to look at the psychology of this is there's a lot of traders that maybe miss this move and they didn't want to chase this market, so they're waiting for Apple to kind of come back. So if you were, you'd have to be a very patient trader to not jump in and take this and look at what you would have missed. But now there's going to be people looking at this gap, hoping that it comes back in, and they can. And first, they're going to want to see if it actually fills, and then if it holds, just like we showed on that daily chart, on the prior chart, to see if that holds or not. So that, in essence, excuse me, is what's called a gap fill. And again, it doesn't have to be a gap up; it can be a gap down as well. And not always is a gap going to be filled, but it often is, and it's a good indicator of kind of future price targets. So with that, as always, I thank you for listening and happy trading.